Hi, everyone. My name is Risay Candelaria, and I want to welcome and to thank you for joining us today. I'm a current member of Impact Austin, and today I will be serving as the moderator for today's event. I'd like to start off by recognizing the sponsors for our session today, Schwab Charitable and Mariner Wealth Advisors. I'd like to thank you for your support of Impact Austin and, of course, in many of our events that we hold throughout this year. I'd also want to take a minute to introduce you to Impact Austin if you're not familiar with us. We do lots of good things here in this Austin community, such as, being founded since 2003 and having given over $7 million in grants over our history to over 68 organizations. As a collective giving organization here in Central Texas, philanthropy education is a key tenet of what we do. And so I'm excited to introduce our speakers today that are going to tell us more about investing, women's philanthropy, and how we can make a bigger impact in our community. So with that being said, let me introduce today's speakers. First up is Mary Jovanovich from Schwab Charitable, who has more than 10 years of experience with Charles Schwab and Company. Mary is a senior relationship manager where her commitment to building successful relationships between advisors and clients is based on incorporating charitable planning into that wealth management. I'd also like to introduce you to Suzanne Wheeler, a certified financial planner, accredited investment fiduciary designee, and a certified financial transitionist. She is a managing director for Mariner Wealth Advisors with over 2 decades of experience in helping her clients meet their financial goals. Today's session will actually start with Suzanne, and she will be sharing data with us about the investment gap and research on women's investing. Thank you so much for joining us today, Suzanne.
Thank you. It's a pleasure to be here, and we're talking about one of my favorite topics, women in general and investing through a gender lens. I wanted to just share with you that these slides that Mary and I will will be available for you after the presentation, so you don't have to worry about taking notes. Next page. This is one of my favorite quotes from a mentor and a friend of mine. When money changes, life changes. And when life changes, money changes. It's interesting how we go through life and see this quote come to reality for each of us. Next page. So just why is financial empowerment so important? As these statistics show, women's wealth and stature is growing, which is very exciting for all of us. The expected amount that women will control by the end of the year is $22 trillion. Take note of the women's executives in the S&P 500 statistic. Love seeing that and love where we are headed, but we have more work to do. Next slide. According to Vanguard's men's retirement account balances are 50% higher than women's. Not only is that frustrating on principle, but it's particularly painful when you consider women live 6 to 7 years longer than men. Next slide. So women are the new breadwinners. So I'm sure that is putting a smile on several of your faces. But in more than 40% of American households, women are the primary breadwinners. That's 4 times more than it was in the 60s. The reality is that female employees still earn less than their male counterparts. This, along with the fact that women take off to care for children, it leaves them behind in the race for accumulating enough in retirement. A lot of times we talk with women about going part-time with their work schedule instead of dropping out of their career if possible. Having half the contribution in retirement plans during those crucial years of saving and investing can make a big impact. It's great news that women are becoming more entrepreneurial, but that presents the challenge of all of their cash into the business and not into savings towards retirement plans. And the last thing we'll comment on here is women lack confidence in investing. This is not for all women, but some, and they're more adverse to risk. I think with a little education, this can change. And we've been a thinking partner to many women that are collecting their investment strategy. Next slide. The investment gap is a reality. I think women are better at seeking help and they feel more comfortable in delegating. Also, when we're thinking about married couples, they're 85% of the women delegate those long-term financial decisions to men. And I think it's primarily because we, as married couples raising a family, we're in a dividing and conquering state, and that tends to be left towards the male counterpart, as the women are doing other chores in the household and getting their children to school and sporting events. But I think it's time for women to get engaged, and we're seeing that across the U.S., but we need to keep increasing that percentage. Next slide. This is interesting, an interesting statistic. When you look at a married woman, a two-income household, and then a single woman in a one-income household, the difference in the savings, the married couple tend to spend more and save less. So one of the things I will put out there is, the single income household, they're depending on themselves. They don't have someone else to rely on. So, in these situations, both two income and one income household, I'd beware of lifestyle creep. We all work hard and we all want to be treated, but we should do that within reasonable states. Next slide. So you alone will most likely have to manage your finances. So get in the game now. And I would say let's start engaging and start today. Next slide. What is the game? The game is never run out of money, but it's also a game of enjoying the journey along the way. Next slide. This is one of my favorite slides. We talk a lot in our industry about stocks and bonds and savings plans, but in reality, you are your most valuable asset. Next slide. Your lifetime earning capacity is your largest investment, one that you can control and deserves proper planning. Understanding your benefits in your current position today, those benefits mean more than just your salary and your bonus or bonuses, I hope. If you work for a large company, you may have deferred compensation in the form of restricted stock or stock options, but you also need to know the value of the insurance and, your time off and other benefits. You should understand all of your benefits. Women are not known for negotiating. With men, they will ask for more and consider negotiating a required skill in the business world. To do this, you need to understand what you're negotiating for, what you want, and get prepared. Resources that you can take a look at are listed here below. Again, you don't have to take notes. We'll have that for you. But these resources may be able to help you getting prepared for those negotiatings, whether it's for a promotion in your current employment or if you're seeking new employment. Next slide. So when we talk about investing, this is a slide that will just kind of set the background. You can see the returns, expected returns on the left-hand side, and the risk in achieving those returns down below. So you can see that, you're looking at cash and bonds. They can be pretty safe over time and lower returns. I will tell you those returns that we're pointing to look pretty nice for cash and bonds right now, but this is looking over a long-term period. When you add equity to the mix, you can see that you're achieving higher returns, but you're also taking higher risk. And then when you are looking out to be aggressive in maybe your younger years while you're still accumulating and looking at 100% equity portfolio, you can see you're on the upper scale of risk, but that return is a little nicer as well. Next slide. And I always like to talk about two sides of money. As mentioned, I am a certified financial transition, which is helping people with the personal side of money as we go through different life transitions, such as starting a new career, changing jobs, retirement, a divorce, a death. The technical pieces we pick up, and that's normally where we spend our time. But you also need to remember this personal side, and your advisor should too, as that change over your career track as well as your saving time period. We need to be flexible. Next slide. So when we're looking at risk and return and digging down a little bit deeper on the S&P sectors, which those are large cap areas, you can see again the returns on the left-hand side and the risk on the lower half of the page or at the bottom of the page. And you can see where different areas of sectors show up. So technology, we've certainly heard a lot. And, it's on the higher risk category, but the returns are much greater, certainly much greater that's shown on this slide this year, but an area that we see a lot of return in. Healthcare, seeing more returns there with a little less risk. But then energy, you can see lower returns and a lot of risk. So this is just a snapshot to show you where different areas show up on the return aspect. Next slide. So investing vehicles. You've heard of stocks, you've heard of bonds, you've heard of mutual funds and exchange traded funds. So when you're looking at stocks, you're buying shares in a particular corporation. So say Apple, everybody knows Apple. You're buying shares of the stock in Apple. Those shares trade every minute, all day long through the trading hours. And you buy at a different price minute by minute. Bonds are you're loaning someone money for a promise of an interest payment, as well as a maturity date where those funds will come back to you. They'll repay the loan. In mutual funds and exchange traded funds, you're actually buying a basket of stocks. So, mutual funds may have 30, 50 or more stocks. So it's more diversified. You're not putting all your eggs in one basket. The mutual funds are traded at the end of the day. So you may put your order in at 9 a.m. in the morning, but it's not going to settle and give you your price until the close of the trading session that day. The exchange traded funds, again, a basket of stocks, well diversified, and but in this instance, it's trading every day or every minute of the day. So you're able to, you know, get in at 9:30, you see something you want to invest in, and you get that price minute by minute. Next slide. So before you think about creating a plan and what might work for you or your family, let's get a little bit personal. Next slide. So we talk about values-based investing, and we've heard a lot about that over the years. It's becoming more and more popular, which I'm really excited about. So you think of the areas of, you know, what does it look like for you? Aligning your investments with your values, making the world a better place. Doing good with your money, which Mary will tell us more about that later, and sleeping better at night, knowing that you're investing in something that is with your values in mind, and also, you know, not worried about as much volatility that you can handle. The last, and one of my favorite areas, is the power of the purse. And so, you know, what do we mean by power of the purse? It's where you spend your money. It's where you invest your money. It's how you vote, and it's how you give with your money. So you have all those choices. So, you know, we're all about empowering you today. So keep that in mind as you're looking at your investment strategy. Next slide. So how do we get started? This is the fun part. Next slide. So when you're thinking about an investment plan, you know, typically people will think that market timing is everything. Oh, the market is down today. Should I buy in, or should I wait to see if it goes lower? But I would suggest that getting the allocation right is the most important, and you can see that area is 91% of the time. That's what helps you achieve those goals. Next slide. Retirement plan choices. So if you're participating in a retirement plan, the things that you might take a look at: target dates, life point funds. Those are easy to select if you base it to that retirement date, or, you know, your risk tolerance. It's easy. You can go on autopilot. But, you know, some of the cons on that, if you are investing based on an age, you know, maybe it's taking more risk if you are a little more conservative. Individual funds, you know, certainly looking at that and rebalancing is important. You don't want to get out of your risk tolerance. And so it's so great to see an investment go up, but maybe it's time to rebalance, take some of those gains off the table. The only other thing I would say here is if you can make the maximum contribution to your 401k each year. If it's a struggle to get there, certainly at a minimum, make sure that you are contributing enough to receive the employer's match. Next slide. The savings investment, having a 6-month rainy day fund or a cash comfort level is certainly different for everyone, but that's a personal decision and one that you need to make on your own and where you feel comfortable. Then investments that, you know, you can do for specific goals, college savings plan, vacation or long-term portfolio growth, you know, or a goal of paying off the mortgage. Monthly or quarterly investing over the long term won't matter. It's actually a way to dollar cost average in so you're able to participate in different times of the market. Next slide. Staying on track, how often to review and how to determine if you're on track. I think you need to review at least annually at a minimum. You know, quarterly, it's nice to see your performance. Semi-annually, you know, are you on track? If you're not, you need to adjust so you can get back on track. And so when we think about what does being on track look like, you know, are you saving what you thought you would? Are your investments providing the performance that you thought it would? And maybe you need to take an adjustment with your savings, but maybe it's not making rash decisions with your investment portfolio. It's taking a look at what's doing well, what's not doing well, and should they be doing well? Should the manager that you've selected be doing well, and if they're not, why? Choosing the appropriate benchmark is not only how your portfolio is doing, but it's, you know, comparing to the market index that you read about. And so, you know, if your portfolio is doing well compared to the benchmark, great. If it's not, maybe you need to make some changes. Next slide. So just putting a plan in place is a great way to start. You know, I know that people that I've met with seem to think, oh, I'm embarrassed, I haven't saved enough. Please don't be embarrassed. It's time to start. You need to know where you stand and where retirement looks like for you, what it looks like for you. Just do it. Just start today. Next slide. So lessons learned. You know, how did you feel in March when we saw the stock market decline? You know, having that long-term plan will help ease some of that anxiety. And, you know, investing doesn't have to be complicated. You know, you can see portfolios that are way complicated that, you know, aren't gaining any more returns than a manageable, keeping it simple portfolio. But remember, we are our most valuable asset. So working on maximizing your value is the most important here, and knowing your value, having the confidence that you are doing a great job and that you are well compensated for that. You know, hope for the best, plan for the worst. I would say, you know, no more sign here, baby. You need to know what you're signing. I'm always telling my daughters, don't sign anything that you don't know what you're getting into. Know where your accounts are, how they're titled. You know, having those conversations with parents and children, you know, about, you know, how they are with their finances and should they get started. You know, do we really owe more to our children than straight teeth and a college education? I will tell you that many of the clients that I work with that are working so hard to save for a legacy for their children aren't looking for that inheritance. And they'd rather see their parents enjoy it, as well as look at how they would like to help their charities. And so Mary will tell us more about that, but there's nothing more gratifying than being able to help the causes that you believe in. Trust but verify and choose wisely. Next slide. These are, you know, some things that can derail the plan. Nobody wants to think about divorce, but again, you know, knowing where you stand. Children and parents' financial challenges, illness, misplaced trust with a partner or an advisor, overspending, not taking enough risk, or taking too much risk. Next slide. These are resources that might be helpful for you. Again, they'll be given out to you on the slides. Next slide. I hope you've enjoyed the presentation and maybe taken a tip or two, but leaving you with investing is worthwhile. Knowing your value is worthwhile, and above all else, just get started now. Thank you so much.